All right, we're live. So, welcome to the fourth episode of the Canadian Investors Podcast. And today's topic is Square. But before we get started, I'd like to take a minute to introduce ourselves. My name is Kun. I'm an accounting professor, and my interest in investing is same as most others, to provide for my retirement and financial independence. I'm particularly interested in growth stocks like Square today, and I'll let the next person take the baton.
Hi, I'm Nate. I am a school teacher, currently teaching grade 8. I have no professional qualifications in investing whatsoever. I'm just a retail investor, just like probably most of the people watching this. And I have a real interest in using statistical analysis to make my investment choices. I have a blog and a book about statistical analysis. So I tend to be a bit of a quant in that sense, although I think most quants are usually, I've lost my mind, trend-based investors. Whereas I tend to be a value-based investor. I try to find things that have the most growth for the cheapest cost. Over to you, Tom.
My name is Tom. I'm also just a retail investor. I have a background in mostly real estate and the building industry. So yeah, I'm just working towards financial freedom myself. It's always been a big goal, is just to have enough money where I don't have to rely on my labor to support myself.
Yeah, and my name is Jake. I'm actually an electrician by day job, but I've had a huge passion for investing for about 10 years now. I focus strictly on value investing, mostly using discounted cash flow calculations. I also recently started a blog, basically just sharing my journey. So maybe we'll be able to put a link in the description if anyone's interested in that.
Absolutely.
Yeah, definitely.
All right, well, just think we all have to work a little bit harder with the way inflation is going. So let's get to it.
Yeah, definitely.
Yeah, Tom will lead off the discussion introducing Square. Off to you, Tom.
All right. So the first, we're gonna break this segment of Square down into 3 sections. So the first section is going to be strictly about the business. What does Square do? And is it a good business model? What do we see for their future? Then we're going to go a little bit more into the financials and see, is the company performing financially? Do they have growth? Do they have revenue? Are they profitable? And then the last section is going to be, what should this company be valued? What are appropriate multiples? How much do we think the company is worth now? And how much do we think the company is going to be worth in the future? Okay. So can everyone see the screen? You guys can all unmute and participate. Yeah, so Square has basically, it's almost broken down into 2 separate businesses. We have the everyday person, like personal banking type, and we have the business section. So we're going to talk a little bit about each section, and we're going to start first with the business section. Yeah, so a lot of people think of Square as just like a terminal where companies can accept payments. That's a very small portion of what their overall business does. So, they've got the Square point of sale terminals that everybody knows about, but they've also solved a lot of other business solutions. So, for example, payroll, team management, business banking, and the combination of online and retail in person. And then we also have the hardware and how to manage payments. Okay, so the point of sale is sort of like an introduction for a lot of businesses into this. But the thing is most people, when running a business, have so many other things to do that prevent them from actually running their day-to-day business. For example, how do I get employees to punch in and punch out? How do we manage how many hours each employee worked and when they're going to work, scheduling and stuff like that? And how are we going to pay those people? How are we going to take all of the inflows and outflows of the business and make actual business decisions? So Square is an all-in-one platform for merchants in this way. So it allows them to do through their team management software, allows employees to punch in and punch out and track of all of their time cards.
Just a quick question, Tom. So
Yeah.
the way this slide is laid out, and Square mentions that they obviously they can charge for multiple services, and customers can choose to pay for one or multiple. Does this represent their pricing? Not pricing, but their kind of product line as well, like all the little boxes that's illustrated on here?
Yes, basically all their products. So the hardware is the physical device that you would have as a cash register in a business. Also, it does the point of sale. So this allows them to tap or use their cards to actually pay you for your services. They've also have customer relationship management software that allow them to interact with Cash App users through what they call boosts. A boost is like sort of like an online coupon, right? So you can send as a business, let's say if you're a restaurant, you can send like a 10% discount to all Cash App users in the neighborhood, get them to come into your business or whatever sort of promotion you want to run. They have, and within the hardware and within the software, they have team management. So like as a punching in, punching out, and business banking. So a lot of small and medium-sized businesses have a lot of trouble with documentation of their revenue for taxes, for loans, for all of this different stuff, and also integrating online and in-person retail. So let's say if you have an online store and you have a physical store, how do you reconcile inventories, right? If you just sold 5 online and you just sold a bunch in person, how do you update inventories in both different parts of the business? So this terminal allows you to do all that and manage your online and in-person store all in one. Now, managed payments through the cash card or payroll allows you to actually pay your employees. Usually you have to a lot of employers have to hire an outside company or hire an accountant or different people to do payroll and manage all of the financials of the business. For small businesses, that's not always the most, that's not always the best way to do things, right? They need an all-in-one solution that allows the small business owner to actually work on the business instead of spending all of this time on payroll, accounting, keeping books and stuff like that. So do you guys have anything to add? Yeah.
I'm such a school teacher. I rose my hand. I have a lot of thoughts on this just off the top of my head. I'm really glad that you shared this in the qualitative analysis first, because it helped me better understand what their competitive advantages are. I can see it right away. They offer a lot of services that other fintech companies don't and that banks don't. And I would see, personally, I see their biggest competitors as other fintech companies and banks. And I think that might be counterintuitive in some sense, because like, why would the person who wants all these services go to like a bank? But I think banks will try to develop these services and try to catch up to people like, or companies like Square in the future. And I can see like an obvious moat, like comparing them to say PayPal. I think PayPal would, in my mind, be their biggest competitor, being basically in a sense, they're both online banks. And the number of services here I see for Square are significantly higher than the number of services I see for PayPal, and I am a PayPal user. But I do see some disadvantages here also for Square. The number one for PayPal just being that PayPal obviously has a bigger networking effect than does Square. And then I see, even though like there's some significant competitive advantages here for Square over, say, a traditional bank, I see a couple of advantages that the traditional banks are going to have. I mean, one being the obvious incredible capital moat. Two, the biggest competitive advantage I think of the Canadian banks is that they essentially have the right to print money. When they give you a mortgage, they're not taking money from their account. They're just putting money in your account, which is that's huge. It's like owning the casino, right? Whereas I don't see Square ever gaining that competitive advantage. And then, those banks are like embedded in the Canadian government, or essentially protected by law. and are too big to fail ever, period. So I can't see them going bankrupt. Whereas I don't see that competitive advantage for Square either. And maybe someone else wants to add it. Those are sort of the competitive thoughts I had.
Yeah. So since for raising those points, I mean, there's a couple of things that may not be that visible in the short term, but in the long term, I think will make a big difference. And this is, comparing traditional banks to almost all fintech companies. And obviously, we don't think all the fintech companies are going to succeed. Trying to pick the winners here. But one is the customer acquisition cost, right? So if you imagine, the bank's trying to get a new customer, because we know once you sign on to a bank to get an account, this is incredibly sticky, right? You tend to stick with that bank because it's the cost of transferring to another bank. It just, not most people are not willing to do it. And Tom, I don't really know if you remember this particularly. I think Square's customer acquisition cost for, we haven't talked about Cash App yet, but it's like $20 to $30, where it's 100 times as much, like $300 for the traditional banks to get a customer, right? So that means their payback period, right? The payback period of trying to get the customer lifetime value is much, much longer, right? For the traditional
For Square?
bank. The Square is much shorter, right?
Yeah.
Because their customer acquisition cost is way lower. So what we'll see as the, even maybe people in our generation may not care, but what we should see is that the younger generation should take up services like Square's much more than traditional banks. And I say this because I've already witnessed this in China, right? Of course, China is a different situation. They didn't have like a existing credit system. They didn't have Visa, MasterCard. The banks didn't offer credit as the way ours do. So what happens basically, Alipay and WeChat Pay has leapfrogged the entire process, and now the dominant payment processing, and also because they have this link to e-commerce. So actually, my question is trying to flesh out in this talk is that how does Square's other services kind of piggyback on Cash App to make this kind of almost an indispensable service?
Yeah, and I think the network effects of their business, I think, is what's going to give them a long-term moat. And the bigger their network becomes, the stronger their moat is going to be. Like, for example, you have point of sale. There's Clover. There's lots of different point of sale customers. So if you were thinking, okay, I'm just going to buy a point of sale, you have a lot of people competing with them. But when you have all of these other services rolled into one, it allows you to go from 5 or 6 service providers all into one, and allows you to integrate everything into an easier to use onboarding system. Now, in terms of what Nate said on the advantage that banks have with basically the license to print money, we have Square, who in 2021 was approved for their commercial banking licensing. So they are moving, and they are now FDIC approved for commercial banking, and it allows them to give out commercial loans. They've been giving out commercial loans for a while now, but they had to have a partnership with a third party because they didn't have the banking license. So now that they've got that banking license in the commercial sector, I think in the future, like, there hasn't been any official announcements, but I do see them going the way of becoming a licensed bank, just like the current ones, which, like you said, would give them a license to print money.
Yeah, that would make a huge difference for me. If they had that now, I'd already be jumping on.
So they do have that now
like
in the commercial sector. They have it now.
Yeah.
The personal side, you might want to look at SoFi, but that's we don't want.
When you say they have that though in the commercial sector, do you mean they are able to print money in the commercial sector for their loans, or do the loans they give still have to be from their own personal capital reserves?
I'm not 100% sure on that, to be honest. Okay. But the one, so we have in the banking sector, let's see if this could switch. So one thing I'd like to point out is, because of their commercial banking, so historically, I've been self-employed. I know a couple of you guys are. It is a nightmare to try and get a loan. if you are self-employed, proving your income. Like I've gone to the banks before and I say, you can see the money going into my account, right? But they don't really want to qualify it as income, even though they can see the money going into my account, right? So it becomes really hard for small businesses and independent contractors and people running these businesses to qualify with traditional banks. Now, what Square has done is they've taken the business banking license and they've used their AI, because like I said, they have, if you're using the Square terminal, they can see all of your transactions. They can see your outflows and inflows of cash, how much money you're spending on inventory and all of that different stuff. So they have an AI system that can identify potential candidates that would benefit from a business loan. So, we can see, for example, I'm just going to give a made up scenario. So let's say if you're spending $500 on your widget at $1 a piece, right, that you're selling in your store. And now what happens if you are buying that $500, but you have to buy new inventory every month, right? Can you maybe negotiate that price down to 50 cents if you were to buy $2,000 worth of inventory? If you were to buy 4 months worth of inventory instead of 1 month, right? What would that have? What effect would that have on your growth and your margins? But then you say, as a small business owner, I only have $500. I'm running a new business. It's hard for me to come up with that $2,000 right now to spend that would actually help my business, right? But I can't go to the bank and qualify for a loan. So Square would identify a business like this using their AI, and they would come to you and say, Nate, we can see that you might benefit from a $3,000 loan so that you don't have to order inventory as much. You'll save on shipping costs, blah, 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 blah. And now you say, okay, what do I have to do to qualify, right? What documents do you need from me? Now, Square is going to say, well, we already have all of your information. We can access your income and how much your business is costing to run. We can see what your profit margins are. We're able to approve you in of money. So they're sorry, Nate, you have, yeah.
From a qualitative perspective, I can honestly see right away that the services they're providing are superior to anyone else in the space that I'm aware of.
Yeah.
But like one of the advantages that the banks, like as they are now, have is the security, and not just knowing that it's guaranteed by the government, but even the ability to print money is a guarantee. Because let's say Tom steals my identity and steals all my money from the bank can just put the money back in my account with no cost themselves. Can Square do that? Are they willing to do that? Like, what do they do in those situations?
So in the business banking section, I believe they have all the same authorities as a bank. In the Cash App section, I believe they still have to run their transactions through Visa. Okay. So in the personal part, I believe Visa's transactions don't settle right away, and the same protections that you'd have with any like Visa card or anything like that you would have with the Cash App. Now I'm gonna switch over and see this slide here. Did it switch on the thing?
Yeah.
Okay, so this is from the 2020 investor presentation. And this is what really gets me excited about Square's commercial banking license, is that the way that they're able to assess credit compared to traditional commercial banks is phenomenal. So they have right here, they're showing from 2016, they had a 4% loan loss rate, and they've been able to bring it down steadily. It only shows until 2019 because this was from the 2020 investor presentation. So now if we've got a less than 4% rate here, now I've gone to, if it's switched again, so this is from the federalreserve.gov site. So the typical loan loss on commercial banks is around 5.6%. And the higher risk ones, which would probably be more small to medium-sized businesses, is around 8.1. So the ability to have a loan, the ability to have loan losses that are that much different will really improve margins over the long term. Like their ability to assess credit risk, I think, is essential. And the way their AI and the way they have all of the proper documentation on the businesses that they lend to will allow them to lend at more competitive interest rates if they're able to better assess risk.
I think just not having to do a loan application with all the documentation part in itself is killer, because having recently gone through a couple loan applications, they're the worst.
So
and they make them needlessly hard in a regular bank.
So why don't you think Square is in Canada yet? So is it because of the oligopoly that Nate mentioned and to make it tough to break in, or is just they just don't have enough resources and choosing to focus on the Europe instead?
Well, I think that up until now, like they've been around for a while and they're just starting to go into Europe and get the different, like moving from country to country in this space. There's a lot of regulatory hurdles. And I don't think that they should move to expanding to too many locations at once, because it's just going to balloon their expenses with trying to spread themselves out too thin. I'd prefer that they try and get more market share in the US, and now they go into Europe. And now once they get a little bit more of a foothold in Europe, then they can start to expand to different places. I don't want to see them expand from country to country too quickly, just so that we don't have too much expenses, and just so that they don't get themselves spread out too thin. So you have anything to add so far, Jake?
I'll just kind of piggyback. It does seem like Block or Square is building this complete ecosystem, as opposed to like PayPal, where they're kind of focused on one area. So I think you're right that it's better to focus in one geographical area before expanding. One concern I have, I guess, would be like Nate was saying, I think the banks can kind of pick up on this after. Like, I don't know if you guys are familiar with the company Upstart, but they're already kind of partnering with banks to do this, like in terms of the AI loans and that sort of thing. So that's a concern I'd have.
I mean, the banks have almost unlimited resources, so their ability to like come in to see what Square is doing, see how amazing it is, and think, you know what, we better do this too before Square blows us away. I feel like it's not going to be as hard for them as it sounds.
And that's kind of what Upstart is doing right now. They're already partnering with banks and have this like algorithm or whatever.
But with that algorithm in the banks, the way they have it, you still got to produce the numbers for them.
Yeah, I'm not sure 100% how it works.
Yeah, you'd still have to probably submit your numbers to the bank, right?
I do think that's a major benefit of Block for sure.
Yeah. Well, in terms of that argument, right? Like having potential competitors with unlimited resources, and Square already went through this. And I think I read this on the Antonio Linares' blog, and say, well, Google and Apple, right? Google Pay and Apple Pay tried to take on Square with their commercial services, right? And what happened is that, the market, for each company, their market grew, but Square grew faster. So it wasn't that they could take a business away from Square. So the argument is that companies that are so big, right, are trying to compete on many fronts, may not have the focus needed to actually service these customers well, especially when you're trying to develop new products, and which Square is doing, right? It's trying to make this commercial banking, the customer user experience way easier. And if you think about these banks, then you can say, well, they still have to compete with each other, right? So who's gonna, one way probably for a huge bank like JP Morgan to purchase Square. But if you're looking at Canada, you have 6 banks. Yes, Royal Bank is bigger, but like it's not like they can suddenly all kind of get together and say we're gonna crush Square, right? So I just don't see that type of unified front, and it's not so easy to transition your company culture to like, oh, suddenly we're going to be a AI company. It doesn't. I don't think that works that way.
You don't think the 6 banks in Canada will be willing to work together to try and crush an outside competitor? I feel like that's exactly something they would do. You said that, I was like, oh, of course they're going to do that.
Oh man, yeah, I can get inside those boardrooms or can make a movie out of that.
I'm a big believer in investing in the state, in the sense that it looks like the state is going to sponsor a company. That's such huge moat. I think it risk of the company going to zero.
Yeah.
But I would say, yeah, like I think the obvious point here is like which company is going to grow faster, and I think Square is definitely going to grow faster than these other companies we're talking about.
Yeah.
But I think the question is, at their current valuation, is that growth worth it? And I'm sure we'll talk about valuation, but for me, that answer is no.
Yeah, I wanted to Tom, maybe if you can talk about Afterpay, because so my question is basically, so if you had that comparison with PayPal, Nate, and I think PayPal, it first was acquired by eBay, right, and then it was spun out by eBay, and then now eBay is having this, they kicked PayPal out as their exclusive payment processor. And so now PayPal is looking at Amazon and other ways, right? So this is, shows the vulnerabilities of a pure fintech with no kind of like, it doesn't have support of the ecosystem. And again, going back to an analogy of Alipay and the WeChat Pay, when Alipay, you have Alibaba, the dominant e-commerce platform, kind of basically allowing people to onboard into Alipay very easily, and then makes the product sticky. And the same thing with WeChat, and it's basically the peer-to-peer kind of money transfers that WeChat is known for. That makes it very, people love it, right? So how does Square plan to kind of replicate that success, and maybe through a different route, right? And I think Afterpay does have important role to play here.
Yeah. So Afterpay, I'm gonna get to Afterpay as well. So like Afterpay is like a dual service for both products. So it's something that's going to allow its vendors to sell more products by giving potential buyers a credit option or a payment option where they don't have to take on that risk. And it also gives Cash App users the ability and the access to credit in similar ways of credit cards in order to buy stuff and make payments. They just announced, I don't have it up, but they were announcing that I think Afterpay's repayment, I think, is in the high 90s, where their loan losses are incredibly small. And the ability for Square to use the data and the transaction AI to properly assess credit better than I think traditional credit scores, because credit scores don't usually tell the whole story in terms of what's going on with someone's financial situation, when access to all of their transactions might tell a little bit better of a story. So the ability to lend to its Cash App users or allow the merchants to offer a buy now, pay later, I think is a really good service. So what I'm seeing in terms of like I don't know if you guys play chess, but setting things up for future moves. So they have this big ecosystem, and what they're going to keep doing over the future is just adding in more products and more services that they can generate additional revenue from their existing clients. So it allows them over time to monetize in more ways the existing services that they have. Like, for example, like even taxes. So you can do your taxes for free on WhatsApp in minutes from your phone, right? Taxes are
Cash App.
From Cash App, yeah. From Cash App, you can basically do your taxes almost instantly, which is amazing.
Well, this is what Wealthsimple is trying to recreate, right? I haven't been brave enough to try it yet, but they're saying, hey, we have access to all your at least investment transactions. We can we'll auto-populate all those and make your tax return simpler.
Yeah, like I just did my taxes, and to get all of my information from all of my different sources on how much I paid for this, what all my receipts and everything, it's a bloody nightmare.
I will say though, like I used to use like the software programs out there to do your taxes for you. And 1 year I got like a really bad return from the software, and I went to a real accountant, and the accountant like saved me like something like $8,000 or $9,000. And now like typically every year, like I just go to an accountant for that reason, and I often will like plug it into a software just to compare the difference. And the accountants usually save me thousands of dollars. So like personally, like I think it's a crazy person who's going to use the software to do their taxes. Pay like my accountant, like charge him like $200, and he'll get you like thousands of dollars returned back. Like,
yeah, I think
why
there's a
would
difference
anyone
between
do it?
people with
I
small businesses versus just regular folks with investments, right? That's
yeah, I know a lot of people who they would actually be stupid to go to an accountant because they have really no right complicated. I think it's definitely worth it to go to an accountant. But for this more simplified version, like if you're just working a regular job and you don't have all of these expenses and write-offs, like your taxes are so simple.
That's a fair point. I will say you've got me sold on like the qualitative part. Like I can see like really clear cut PayPal's a better defensive mode just with like the more developed ecosystem. But like obviously I think it's pretty obvious just looking at this. The software they have and the service they're providing is far and above and beyond what other services are providing.
yeah. Before we do Afterpay, I wonder if I can just quickly show this from their investor deck, right? This is 2021 Q4. And what's interesting to see is that they are definitely investing in the future, and the amount of growth, like they grow their services almost 50%, revenue 50% each year, and you can see the growth, like half the gross profits come from their pre-2018 cohort, right? So what they're saying is basically people are not leaving the platform. They keep adding on more and more services, and then that provides a consistent stream of income. And they don't have to do any more marketing to these people, right? Because the service is just so good. And we're basically just waiting for the margin to expand because of the 2018, 2019, 20, and 21 cohort. We know which is much bigger to become more profitable, right? And they also show underneath the chart, the Square return on investment, basically just, their customer acquisition costs, they make it back in 4 quarters, basically, right? Less than a year. They basically earn back the investment they make to acquire their customer, and then it just goes exponential.
Yeah, exactly. So is my screen still sharing?
I think you stopped the screen share, so that's why I jumped in. Okay. But now you can share again.
Okay, can you see my screen now?
Yep.
Yeah, so just like you were saying, in 2015, just the way that they've been growing Cash App is just ridiculous. And in terms of now, they've got better mix of revenue and gross profit from different sources, I think allows any potential downsides. What's not mentioned here is like they also bought Tidal, which is almost like
that was weird.
Which is like Spotify. I found that a little bit weird.
And there's it supports our mission to support like music producers. It's like, when was that in the mission statement?
Yeah, so I'm not sure if that's just going to be like an extra value add to their app, if they're just trying to create like maybe like a super app.
Yeah, but to be fair, it's $220 million, right? Where the Afterpay is like 1.5 billion, so it's not the same scale. So less of a concern.
Yeah, I feel like right now we're seeing companies just buying up other companies left, right, and center in the venture sector, in part just because the interest rates have been so low. Companies are like, we have extra cash, we might as well just try and buy other companies.
Yeah, when the time comes, I'll talk about their debt situation a little bit. I found that a little bit strange, but I think your thesis is basically correct. Like they see a lot of opportunities buying up these private businesses.
Yeah. So here in the investor deck, they're saying that they think that their Square ecosystem, which is the business side of it, they think that it's a $85 billion just US opportunity. Obviously, they're highly doubtful that they would ever catch 100% of that market, or any company usually doesn't get 100% of the market. But like, could they get 10% of that market? Could they get 15% of that market over the next 5 to 10 years? I think that that's within the range of possibilities. What do you guys think?
These are the smaller, like, would it define like by number of employees or by gross revenue? Like, these are obviously not the big businesses.
No, this is the total amount of money that the entire like payment processing and point of sale, like the entire market.
Okay, so when they say 20 million businesses, it's just like they count Apple the same thing as like Joe's,
yeah,
corner
exactly,
shop? Okay.
exactly. With gross receipts of around 6 trillion. If you take the payment processing fees on those, and all the different services, the total market that they're going for in the US is worth about 85 billion.
I actually feel like their market looks to me almost like it's unlimited, and potentially, in the sense that they're going after such a broad base, and they obviously have a clear competitive advantage. And I'm not going to buy them, to be honest. But I just think, like, long-term growth, like I think sky's the limit. But I think what matters is the rate of that growth and the current price, and that's why I'm currently out.
Yeah. So this is a breakdown of the 85 billion. So they expect in total, and this isn't for them, this is for the entire industry, about 39 billion just in transaction profit, 30 billion in software, 12 billion in Square loans, and 5 billion in other financial services. And then $100 billion plus with multiple vectors for future growth. So as they move into Europe and as they move into Canada and around the rest of the world, this total addressable market is just going to balloon.
Yeah, I think what they say is that the European market is growing faster. Now, coming from a small base, you expect it to be, but actually I see a lot of potential, just because, from traveling in Europe, I know a lot of businesses still just use cash, and they're ready for that. It's basically leapfrogging, right? They're not gonna, customers may be jumping into digital wallet directly, as opposed to getting credit cards. Or using them, the way we do. Like North America will lag behind, just because we are kind of spoiled with, the amount of services we have. But I still think, in the long run, Square's services just cheaper, right? It's provides more value for merchants than, Visa and MasterCard, which, for in all intents and purposes are kind of like these toll booths that it really extracts all the value and doesn't provide as much in return.
Yeah, actually, I'm going to throw this out there, that I meant to talk about this earlier, but I think the big advantage fintech has over the traditional banks is in these international transactions. The current banking system for international transactions just sucks. Like, I have like an American bank account, a Canadian bank account, and if I transfer money via through my bank, it takes days. Like, and not only once it's transferred, there's a clearing period. So once I even get the money in the account, I'm not allowed to spend that money until there's had a couple like clearing days period. Whereas like I do business in the United States through PayPal, and the money is instantly transferred back and forth. Like it takes me like 5 minutes, and then I have the money instantaneously. I don't even understand why the like international banking system hasn't caught up in this regard. Like it just seems so bad at international transactions.
Yeah,
in comparison to fintech.
The two profits of the care, Nate. Like it's the same thing. We say Canadian, banks are, they make tons of money, which leads to these kind of inertia, right? They don't have to care that much about your business, to be honest, because they're making money hand over fist. And to clear the regulatory hurdles or to clear the internal processes to change the company culture around, just not in their DNA. Now, if faced with with the threat of survival, maybe they'll change, but I'm not banking on it.
Yeah, for the banking system, I think it's going to be, by the time they catch on, just like I feel like the same thing with the legacy auto system. By the time they catch on, they're so far behind because of their businesses are so large and take so much time to pivot. By the time they feel they Square is actually a threat, or fintech is actually a threat to them, I think it's going to be too late.
That's a pretty big assertion.
Yeah.
When like you might be right, but at the same time, the risk, like when you have so much resources, say like the Canadian 6 banks who can just print money, like how do you compete with people? And like as pointed out earlier, they're also competing with Apple, they're competing with Google, they're competing with PayPal. Like I don't know of any business that has like better competitors than Square. And like I do think they have the most room for growth. I do think they have phenomenal service, and I think they're growing really quickly. But
Yeah.
they're just like there's a lot of risk in this space.
Yeah, I feel the same way.
So we want to talk about financials?
Can we just let Jake speak? Because I feel like we've not let him speak a lot.
It's okay. I don't have much to say. I'm just going to add in that Tom could be 100% right, but I'm the same way with Nate. There's just too big of an if for me to invest in it at this point.
Yeah, it's definitely a fair argument. You know, with any investment, there's risks, and with higher growth, higher multiple stocks, there's a higher amount of risk, and there's also right. Into Square and diversity in a portfolio sort of protects us from the times that we are.
The one comes from their Bitcoin fees.
Yeah, so we're going to get into that. I think that the how much revenue comes from their Bitcoin is actually very deceiving. It's just because of accounting standards. Yeah, so if you buy $10 worth of Bitcoin, right, it shows as $10 worth of revenue.
Yeah.
So it's I don't think that it should be, the revenue should be the amount that Square actually made off that transaction.
Yeah, I agree.
And I don't like the way the accounting regulations force them to do that.
Yeah. The thing that worries me is that their margins are actually higher off the fees that they get from selling Bitcoin, but that is so dependent on the price of Bitcoin. So
I disagree. I disagree.
Is that really true?
No. So like I've followed some other fintech and like crypto brokerages, and a lot of them report that when crypto falls, they actually make more money.
Just from more transactions?
Yeah, because you got, number one, you got people buying the dip, and you got people panic selling.
That's true.
Right. Every time someone buys or sells, it doesn't matter. You know.
I think they collect like 1% on every.
I think it's like 1 or 2%. Yeah.
Yeah.
So this is just a simple. And Tom, if you can, I can share the screen just to, you know, because the Bitcoin thing does seem to be controversial, and I'm looking at their 10K. Their Bitcoin, there's no way the Bitcoin gross profit is actually higher than other things, right? Like if you can.
I don't think their gross profit is, but their margin is.
So from can you see this? What I got?
Oh, okay.
This is from the 2021 letter to shareholders that was just released recently. So they actually differentiate subtracting that deceiving Bitcoin amount. So if we go here, total net revenue. So total net revenue was 17.66 billion, an increase of 86% from the full year 2020, excluding Bitcoin, right? So that's the number I think we really got to focus on rather than total net revenue.
Yeah.
Was at 7.65, up 55%. So yeah, about almost $10 billion is basically, we should just take that off and pretend like it's not there, because it's
of that 10 billion, mind you, like so their cost of the Bitcoin cost is 9.8. So yeah, the gross margin is minuscule. Now, Jake, I'm just kind of curious. You said this their net margin, but how can you actually separate the net margin? Because when you're talking about operating costs like product management, sales and marketing, are you attributing any of that to Bitcoin or none of that to Bitcoin? because
Yeah,
that's obviously going to skew things, right? And then they have all these losses on equity investments that obviously made their net income zero in Q4. That doesn't mean they lost money. They just, that was an accounting write down.
Yeah, and also for the Bitcoin that they own on their balance sheet, apparently the way the accounting standards are, if Bitcoin goes down, you have to write it down. But if Bitcoin
below your cost
goes up,
basis,
you can't. No, yeah. So if Bitcoin goes down below your cost basis, you've got to write down the asset, but you can't write it up when Bitcoin goes up.
Yeah. Tesla ran into the same thing, and then actually there's a Harvard case on it. It basically, if at any point, right, considering how volatile Bitcoin is, at any point Bitcoin drops below your cost basis, you have to recognize the impairment, and that one stays, even if the Square or Tesla actually made money by selling some Bitcoin when it's high, like that doesn't change their version of impairment, which is it's kind of funny. But
or if Bitcoin goes up, they
it's
can't
treated
write
as
it
an
up.
intangible asset on their books, not as an investment.
Yeah, I was just talking about operating margin, and you're right. You can't calculate 100% because you don't know how much of the other operating expenses went into the Bitcoin. But I just took out the impairment and the Bitcoin cost, and I got 1.31% for operating margin, and I included the other ones for everything excluding Bitcoin, and I got 0.01%. But I do think long term, the rest of the business will grow. But like in present day, Bitcoin just has such a huge effect on their net profit.
Yeah.
Yes, but there are other things that are driving net profit down, right? When we're talking about net profit in the range of 1%, a tiny amount can make the net profit go, 50% higher, 50% lower. So this is mathematics. Tom, do you mind? Let me share just a second. I think I had some interesting observations. Of course, you guys can tell me whether they're interesting or not. I was looking at their operating expenses because I said, well, if this is a company with good operating leverage, when is it going to show? So I was just comparing, and I know Nate is a fan of these, and you probably had some of the comparisons. Well, so basically, in 2021, we see a big increase in the amount of sales and marketing expense, as well as product development. You can call it R&D. And I was basically thinking, okay, so we know they're expanding their offerings and they're expanding to Europe. To get people to join the network, you need to spend some cash. Can I find a comparable? So I was basically go back to Salesforce in 2007 and looking at their R&D percentage. So it's 9% in 2007. In 2019, 16%. So it doesn't seem the R&D would go down. And if we're to, so I'm not banking on the percentage of R&D to sales to go down, but look at SG&A. Salesforce at 68% in 2007, and it's still at 56% in 2019. And for Square in 2012, the SG&A as percentage of revenue is 46%. And in 2019, it's down to 22%. So even though you see a huge jump, from 2020 to 2021, we're still seeing that that we're still seeing the operating leverage take effect to somewhat, right? And if we're not to 2012 to 2019, that's before they started purchasing Bitcoin. So into 2021, I excluded the Bitcoin sales from the calculation and figured out it's 18% of those sales went to R&D and 33% went to SG&A, which is still lower than 46% back then when they Square back in 2012. So I'm hopeful, right, that these as the network gets bigger, SG&A becomes much less of the total cost, and we should see margin expansion at that point.
Yeah. Okay, now we're gonna pull up the numbers.
This is the part I always get excited for. This is the part I actually care about. And I'm really glad that I have Jake here with me today, because usually I'm like the perma bear who's always like poo-pooing on the value of other people's stocks. But Jake is much more bearish than me, so we'll balance out the conversation a little more.
Yeah.
Yeah.
Okay. So now, can you guys see the black screen?
Yeah.
Okay. So right now they're sitting at a market cap of around 61 billion. Let's see what their financials look like. We're going to keep it on annual. So we can see from December of 2017, they've been to now. So over 5 years, if we exclude that Bitcoin revenue, they've basically 5x their revenue in 5 years, right? So we can show that this shows that management is executing on a high level. We have gross profits are steadily growing.
Well, if Bitcoin was 10 billion, it's closer to 4x. Is that, or am I wrong?
2017 was around just over 2 billion to 10
Yeah,
billion.
2021 is around 8 billion, right? Yeah.
Oh,
Bitcoin,
yeah.
Bitcoin
Actually,
revenue was 10 billion. Yeah.
You're correct. So yeah, about 4x the revenue in 5 years. We can see that gross profit is growing at almost just the same rate. So, from 839 million to about 4.5 billion in 5 years of gross profit. I think that's pretty good. Anything else? So we can also see, so in terms of net income, because of their spending and everything, we're not really seeing that positive net income yet.
Yeah, and also they had the stake in DoorDash, and they had the stake in some other companies that went down in value just because 2021 all the growth stocks went down in value. So it's kind of like, the comparison is not very good because in 2020 was a good year. So if you compare it to 2020, it's like, oh man, they're down by a lot. And also, yeah, 2021, if you just take these unrealized loss adjustments, then they're gonna have negative net income, right? So I know a lot of people say, hey, of course you can't ignore net income, but in this case, a lot of this non-cash. So I just want to put it out there.
Yeah.
I got a question about this. When was the company founded? Because it wouldn't be fair to compare to the first year to now, right?
Let's see here.
2009.
Incorporated 2009. Okay.
Yeah, incorporated in 2009. So back to the financials. So if we look at their balance sheet from 2017 till now, they've taken 866 million in cash and cash equivalents. Now they're sitting on about 5.3 billion in cash. So, they have enough cash to fund the growth of the company. If we take a look at just total current assets, we've got 10 billion, and take a look at their total current liabilities to see, are they going to have to raise money? Or
their debt actually went up by a significant amount.
Yeah, so I think that
year.
they did raise some money. I think they raised a few $billion in cash.
Those are senior notes, and I looked into them, like just looking at the notes of the financial statements, like what are they using it for? They just basically said, for general corporate purposes, potential acquisitions, R&D, which kind of a little bit disappointing, kind of like, well, all right, so you're just raising a financial moat. In a way, it's good, like interest is not that high. It's around like one is at 3.5%, another 2.5%, but it's still a couple $1 billion that you're borrowing, right?
Yeah.
And if the return you're not getting it from your equity investment, that's generally that's introduced a bit additional risk to the company.
$5 billion debt isn't really that much though for a company with this big
5 billion.
Yeah, that's what I said.
So at this point, if we take a look at their total debt compared to their total cash, they do have more cash than debt.
Yeah, I think that's totally acceptable amount of debt, to be honest.
Well, but they're paying interest. That's what I'm saying, right? They raised all this money, and I was hoping for maybe a clear vision of how they're gonna spend it, right? But if they're just holding cash, I mean, they're not earning interest on cash, obviously, and they're still paying 2 to 3% on interest for the debt.
Yeah, that's a really good point. I hadn't thought of that.
Yeah, duly noted. That is a very good point. Where was I? Oh yeah, total current assets and current liabilities. Total current liabilities. So they've got about 5.4 billion in current liabilities and over 10 billion in current assets.
Yeah, you know these things with the financial companies. Their balance sheet is basically all messed up, right? It's like their liabilities are customer deposits, right? Like, and then their assets become these customer loans. And I took a look at the Square's balance sheet. They're like halfway, like they're not like a regular company's balance sheet, but they're not presented as a financial institution either, right? So that did, give me some trouble in understanding, well, how should I exactly use these ratios? Yeah, for example, banks would actually have a lot of debt on their books, and people are generally not that too worried about them, right? Because it's just, as long as there's no run on banks like we have seen in Russia, then those are generally safe.
Yeah, I mean, that's a really good point. Although I would say there is a slight difference. I mean, like it's like Ford, they list the people's leases on cars as a debt for the company. So people look at Ford and will say like, look at this insanely massive debt. But the majority of that debt is actually just people's like car leases and loans, right? Which is give essentially guaranteed future profit for the company. So, I mean, the more loans they have, the more debt they have, the more profit the company makes. But at the same time, I don't think we can look at those loans exactly the same as we would a regular bank that can print the money to absolve the loss, right?
Yeah, definitely. So if we look at, so we can see that the business is performing. They've got cash. I don't think they're at any risk of going out of business or having any major dilution anytime soon. Would you guys agree?
Oh, speaking of that, yeah, actually, if you're following the stock in the last while, they had that jump right after they reported earnings, and then there's like a lot of sell-off. I was looking at that. They actually had a lot of convertible debt expire on March 1st this year, and the strike price on that stock option is like around $20, something like extremely ridiculously low. And I would have no doubt those people would have converted, and some may have sold their shares on the open market. As for the dilution, they have like 3 tranches of these convertible notes still on the books. They're not currently counted against in the diluted EPS because the strike price is somewhere in the 200s to 300. Yeah, so I did actually do some homework on their debt portion, because I just it's quite a lot of money, and they have Jack Dorsey seems to like these convertible notes. So once the stock goes back to 200, right? Hopefully it do, but I do expect a bit more dilution.
Yeah. Okay. Then, so the company seems to be very healthy financially. And that just brings us to the last topic is, what is the company worth? How much should we pay for it if we're going to buy it? And what type of valuation? So this here, it'll just give you quick overview. This shows what are the analysts thinking that the company is going to be worth over the next year. So if we're just looking at the 5-star ratings, I like to look at the analyst's average return, and only really look at analysts that are making above like 20% a year, because that's what I'm aiming for, is above 20% a year. So this guy right here, Joseph Vafi, his average return is 36%. He's got a price target of $210 that he put up 9 days ago. And then this guy here, Josh Beck, he's getting an average return of 23%, and he's only got a $175 price target. So analysts are probably thinking that in the 175 to 220 range would be a fair share price in the next 12 months. And let's look at the analyst forecasts. So this is the EPS forecasts, and looking at the blue lines are what actually was reported, and the gray line behind is what analysts expected. So as we can see here, like analysts on average, their average rating is pretty close, right? So this would put us in year 2025. We've got an average estimate of $4.45 of earnings. So the question would be, what is a fair multiple in 2025 for this company? What do you guys think?
Okay, this is my favorite part. This is the fun part. Can I share my
Yeah.
screen?
Yeah.
So I compared this. I didn't actually do an exact valuation, which is what I normally would do. And that was just because the PE was so high for me. I really just wanted to explore the idea of, could it be worth it? And one second, just gonna share my screen. For me, I didn't think it was worth it. So I think the company is a good company. I think it's growing fast. I think it's worth a high multiple, but I think the higher the multiple and the higher the expected growth, the more we're paying for future growth, the more risk we're taking on. And the amount of risk I would be taking on for buying a company sitting at a PE of 322 it's not worth it for me. So
do you adjust the earnings by anything, or just taking the current?
I just used basic earnings.
Well, this year's
actually,
negative.
I will say, after looking at Tom's presentation, he does address some of those concerns with me. I'd be willing to pay a higher multiple than I originally thought, based off what Tom showed me today, specifically in regards to how fast the revenue is growing.
But it has to be adjusted earnings, right? Sorry to interrupt. It has to be adjusted earnings because the current
that is adjusted. That is adjusted.
Oh, this is for 2021, this year, right? Not the quarter. My apologies.
Right.
Yeah, because you can't do negative.
So obviously, like PayPal and like Canadian banks are way cheaper. Their past 5 years growth is 7% for the banks and 24% per year for PayPal, which is pretty awesome, actually. If you look at the banks last 2 years, they did terribly. If you look at PayPal, they did really good, and Square did even better. And I've got an analyst predicted growth rate here at 40%, basically, compared to PayPal at 24 and Canadian banks at 7. 40% is a really big growth rate. But for me, like for a PE of 322, I want to see a much higher growth rate than just 40%. And obviously 40% is phenomenal, but it's so high of a PE. I'm not comfortable with that level of growth. And I also compared the growth to the average past growth. I know some people don't like that type of strategy, but I think, you can't ignore history. History shows the company's ability to execute. So I just took an average of all these metrics. So I got, a 34% growth rate, which if I was buying the company and actually going to buy it, that would be my assumed growth rate, which gives me a PEG of 9.4, which is it's astronomical. And comparative, like PayPal, like, yes, the growth is smaller, but I think PayPal's got a bigger moat in terms of its networking effect. And it's just so much cheaper in terms of its price to earnings ratio. Personally, I'd much rather PayPal. In fact, after doing this analysis, I think I'm going to buy some PayPal stock.
Jake, what do you think?
Well, to be completely transparent, I didn't. It's very hard to do a DCF on this due to the amount of revenue from Bitcoin. But I did throw in a couple growth numbers. Now, this is including revenue with the Bitcoin. So if we do 50% next year, 40% for years 2 to 5, with an operating margin reaching 4%, I got a fair value of $111
today.
That's what the cost of capital is.
You hit it on the nail.
Is that what it is right now?
Yeah,
it's at 106.
106. It was like 111 a day ago. So take your pick. Yeah, good job.
that is quite the ask, though, in my opinion.
Yeah.
Like that would give a revenue in year 5 of 101 billion.
So let's see what the analysts think. We've got analysts. Average analyst revenue estimates for 2025 is 32 billion. Yeah. 32 on the high end. They're saying 50.
For which year is that?
2025.
25.
Yeah.
So my math shows on average, I think if we look at, like, for example, like let's look at, let me share my screen again.
So 2025, Jake, what did you think how high their revenue would be without Bitcoin?
Well, this is with Bitcoin, and this would be 2027.
Yeah.
And it would
100 billion?
Let me see here. Yeah, 102 billion.
That might make sense if they're growing at a 40% rate, even at 30 to 50 billion by 2025. Add on 2 more years of 40% would probably get it close to like 80, 90, 100 billion.
Yeah.
So you're pretty in line with, I think, what analysts are predicting.
Yeah.
So if it can do that, and if it does get up to a 4% operating margin by year 10, which I think is doable, I think PayPal is at like 6%, maybe 6.5%. Then
Yeah.
I think it's fairly priced.
So we think, so I'm doing a calculation here of, you guys can see my screen right now, right?
Yeah.
So we've got here an average estimate of $4.45. Now let's assume, we were just looking at Nate's calculation of PayPal. We've got Square growing at around 50% and PayPal growing at around 25%. So if PayPal justifies 28 multiple currently, and Square is growing at double the rate, we could assume that maybe a 50 to 60 PE would probably be fair. Is that fair to say?
Honestly, if with the revenue growing as fast as they are, and if the PE was below 80, I would jump on. But
okay, so let's say
I'm not willing to jump on for a PE of 300.
So
and that's for today, not for future.
Yeah.
Right.
So if they can continue to grow at this rate, and if they were to able to hit analysts' estimate of $4.45 in year 2025. So let's say if we put a 60 PE on that, it would give us a share price in 2025 of $267. So in a 3-year period, that would be a little bit more than a 2x. If it were to say we were to see, because you said we're at like 300 PE right now. If PE were to continue to fall while the share price goes up, even in year 2025, if you were to throw an 80 PE on it, it would give us a share price of around 356. So we've got, if they can execute, and if let's say a 60 to 80 PE, we're looking at like at least 2 to 4x over the next 3 years.
But we also have, if the company fails to execute, a huge potential loss, right? Because it's obviously not going to justify a PE of 300 if the earnings don't keep up. And then when in that case, I would expect the company stock price to plummet down.
Yeah.
I have just one chart to show you, and I didn't do a full DCF either, but I think this will sum up my general investment thesis. And for the record, I do have about 100 shares in Square. So so I'm just using ticker terminals. Basically, these two, the green is operating expenses. Actually, yeah, it says other, but basically is the everything, all the operating expenses, excluding cost of sales. And the orange is the gross profit, right? So basically you can see here, both are growing, right, exponentially. In the past, and starting 2012, this is the as far back as I can get the data for. Operating expense has exceeded gross profit, so they're in a loss position. But 18, 19, 20, we started to see this even out, right? In 2021, this is actually higher now, and that's including the Bitcoin impairment. It's not a big amount, but if you remove that impairment, the gap between these two lines in favor of the orange should go. So the investment thesis is centered around this idea of adoption S-curve. As new technology, when they come out, you're not going to see explosive growth, right? So the S is kind of the flat portion. We're on the flat portion, but I'm starting to see we're getting into a much steeper curve when adoption is going to increase and explode. And I do think growing 40-50% per year is to be expected. I would be surprised if they don't. The idea is obviously, can they keep executing to the same amount? And I actually think, Jack Dorsey resigning from Twitter and just focusing on Square is a good thing, right?
Yeah.
He already does too much yoga to begin with, right? So if he can, take that Twitter time to put it into blog, and I like his, customer driven focus. So you can think a lot of these operating expenses just as investments to gain a network, right? And if they want, they can actually make the gross, the margin, net margin a lot bigger, but it just means that they're not investing as much in gaining that wide customer base, right? So I'm happy with that, but I'm also happy to see the gross profit is inching forward faster than operating expenses.
What's ticker terminal have for analyst estimates?
Sure. So
to 2025.
Yeah, 2026, 5 years forward, right? So yeah. So they're saying 2026. Actually, they have fairly low revenue expectation. I don't know if it's yeah. Part of it, maybe it's kind of adjusting for Bitcoin. I haven't actually looked at these.
Yeah, like sometimes I wonder how they do this, because they've got 2025 at 38 billion, and they're expecting a 14% decrease from 2025 to 2026.
Yeah, you can always look at the street targets. So, they're saying currently a median of 180 and a mean of 185, right? As for analyst, consensus. With roughly around 30, close to 40 people, 40 analysts following the stock.
Yeah, I've got my 2025 price target as being around $300 plus or minus by like 40 bucks.
So I know Kuhn and Tom, you already own prices of Square or shares of Square. Would you buy it today at its current valuation?
Absolutely. I currently on the drop doubled my position recently.
Wow. Kuhn, would you?
Oh, sorry, yes, I would. I'm just not in a position with all the cash, so and I prefer to buy in slightly bigger increments than a few shares at a time. So I would. It's a matter of time, and hopefully it stays down just a bit more. Allow me to accumulate. I'm not trying to build a super huge position, right? My conviction is not as high on this as Tesla, so I'll try to limit my my exposure generally to less than 3% of the portfolio.
That's fine. I would not buy a stock, but I would much rather have a stock than Tesla. Sorry, Tom. I cut you off there accidentally.
No, that's fine. Yeah, I agree. At today's prices, it's definitely a buy for me. It's definitely a buy. I think. Let me see how. Yeah. So right now I have 200 shares in total. I'm pretty comfortable with my current holdings. Like unless it drops to like the $60 or $70 range. I just bought 100 shares, just over 100, like I think 50 shares at like 105, and I think I bought another 50 shares at like 110 or 115 or something like that recently. But yeah, like I've got a $300 plus price target in the next 3 years. So if I can buy it at just over 100 bucks, I'm planning on at least 3xing from today's prices over the next 3 to 5 years.
Nice.
Yeah, in general, I think in a high inflation environment, even in recession, the winnings will go to the low cost provider, right? And you just have to think about who are the low cost provider. And of course, you can say, well, the bank has a lot of cash reserves and they can lower their prices. Well, yes, right. But Square has the built-in advantage in acquiring these customers, and as long as they have enough cash to survive a recession, it should come out victorious on the other end. So I think and this time I have to tap out pretty soon.
I gotta tap out too, but I think we missed Jake here. We didn't get Jake's final say.
Yeah.
Well, I wouldn't be buying at this level, obviously.
Yeah.
There's just not enough margin of safety for me, and a lot of the revenue really depends on the popularity of Bitcoin going forward. I don't know enough about Bitcoin, so I'm not personally willing to make that bet. But if it dropped low enough, I'd take another look.
So Jake, assuming Square can execute, like obviously you're not going to buy it, but let's assume that they do execute. Would it be worth it at today's price?
I probably still wouldn't buy at this price. I think it's fairly valued, but I personally like to have like a little buffer for safety. Yeah. But if you think the numbers, they can outperform 50% growth, which they did last year, I think they did 86%. Then
if we subtract the Bitcoin discrepancy, it's at like 55%.
Yeah.
And I think the growth is actually going to increase. As the network effects kick in and they acquire new products and services to market to their existing customers, I think that they can grow their revenue significantly and profits without those customer acquisition costs. I think as they expand into Europe, we're going to see quite a bit of expenses in the SG&A. But from the investor presentation, I think they said that it's like they invest from 32 million in marketing in 2017, brought them up to like 32 million in profit 3 or 4 years later. So they can basically like get their ROI pretty quickly in terms of what they spend to acquire and expand versus what they get in return.
Yeah, I actually agree with you that the growth is going to go up. I just don't think it's worth the risk for me.
All right, gotta tap out now, and let's figure out the interesting company to talk about next week. And enjoy the talk, and have a good day.
Yeah.
Bye, guys.
Bye.
Yeah.